Hello, ladies and gentlemen. This is Usman Ali, and we are here to solve the second problem in the sequence of LCM rule numericals. The data is given to us. As usual, I've taken a screenshot so that you can have an experience of question while I'm answering the question. The data is given related to a company. This data is slightly different from our previous numerical, and here we're gonna have a step above, a step high, understanding of it. So that was quite basic, and this one is little advanced than that. So we have these four products, product A, B, C, and D, maintained by the company. So first of all, I'm gonna shift the titles of the product A, product B, product C, and product D. Then obviously I'm gonna shift the cost information, which was the purchase price of this product. So the original cost at the time when we purchased product A was $25, so I will shift $25. Then the cost of the product B was $42. I've shifted 42, and for product C it's 120, and for product D it's $18. Now the replacement cost is the cost which we need to pay if we want to buy it today. So replacement cost for product A is $22. For product B it is $40. For product C it is $115, and for product D it is $15.80. This time, unlike the previous numerical, this time we need to calculate the net realizable value. Earlier, if you remember in the previous numerical as well, and even in the PPT chapter, I told you that if you wish to calculate net realizable value, then it is equal to selling price minus the selling expenses. Okay, so let's do it. What is the selling price of product A? The selling price of product A is $40, so I will write $40 minus what is the selling expense of product A. The selling expense of product A is $6.50, so minus $6.50. Okay, now it's an Excel sheet, so it's not gonna retain 40 minus 650 on the screen. It will directly give me the answer and gonna retain the answer, but I will upload this Excel sheet also to your portals, so you can double click it and you would get that, okay, from where the answer came. So, or what's the formula at the back. So it's selling price of product A $40 minus the selling expense of product A $6.50. So we get a net realizable value of $33.50. Likewise, I'm gonna calculate the net realizable value for product B also. As you can see, for product B the selling price is $48 minus the selling expense of product B is $12, so we get 36. For product C, the selling price is 190 minus 25, that's the selling expense for product C, we get 165. And the last one, the product D, our selling price of the product D is 26 minus $3 is the selling expense on it, so we get a net realizable value of 23. Okay, let's go to the second part. The second part is to calculate floor. What is floor? Floor is net realizable value of that product or item. So the net realizable value of product A is 33.50 minus the normal profit. Now unfortunately, the dollar amount of the normal profit is not given. As you can see here, this is the column of normal profit. Okay, so this is the column of the normal profit, and it's given in percentage, and it says normal profit on sales, means normal profit of product A is 20% on sales, 20% on the selling price, 20% of $40. So first we need to calculate what is the dollar amount of normal profit, then we can write it here. Okay, so I will delete this, whatever I've written, because it cannot be completed unless I don't know about it. So I will quickly write here the name of the products, product A, product B, product C, and product D. And then I will calculate what? I will calculate the normal profit amount. So what is the normal profit percentage of product A? 20%. Now 20, let me zoom it so that you can see it. Okay, I cannot zoom it for time right now. Okay, so what it is, it's 20%. So 20%, ladies and gentlemen, it means 0.20. Okay, of selling price. What is the selling price of product A? $40. $40. So I get $8. Okay, so $8 is the normal profit that I'm earning on product A. Let's go for product B. Product B percentage is 25%. So 25% means 0.25. Multiply by the selling price of product B, that's 48. So we get a normal profit of $12. For product C, the normal profit percentage is 30%, which means 0.30. Multiply by the selling price of $190. We get 57 normal profit. And for product D, the normal profit percentage is 10%. And we can multiply that with a selling price, which is 26. So it's like 2.6. Now that we have the values, we are good to calculate the floor. So floor is net realizable value. For product A, it is 33.50 minus what is the normal profit of product A? $8. That's it. We got 25.50. Then the net realizable value of product B is 36. And what is the normal profit of product B? $12. So the normal profit is 12. 36 minus 12, that's 24. Our floor value of product B. Let's go for the C. Now, what is the net realizable value of product C? 165 minus the normal profit of product C is 57. So we get 108 floor value. And for the last D, our net realizable value is $23 minus 2.6. So we get a value of $20.40 as our floor for product D. So that's how we did it. If you remember the yellow color of the previous video, replacement cost, ceiling and floor, we are supposed to find the mid of any of these three columns. Whatever value is the mid value, that I'm gonna write it in the designated value column. So we have 22, 33.50 and 25.50. So definitely 25.50 is the mid value of 22 to 33.50. Then we have 40, 36 and 24. So 24 is the smallest value, 40 is the highest value, and 36 is the mid value. We have 115, 165, 108 for product C. So if I'm not wrong, 115 is the mid value. And for product D, we have 18, 15.80, 23, sorry, not 18, 15.80, 23 and 20.40. So we got 20.40 as the mid value of D. That's the designated value. Now, ladies and gentlemen, if you remember the light blue color of the previous video, our last step of calculating the LCM would be that we're gonna compare the cost of the inventory with its designated value, and whichever is the lower one, that we're gonna select. So we got a cost of 25 to product A and 25.50 designated value. So for sure 25 is the smallest value in these two. For product B, we have 42 and 36. So 36 is the smallest value. For product C, it's 120 and 115. So I'm gonna choose 115 as the smallest value. And in the cost of the product D is 18, while the designated value is 20.40. So I'm gonna choose 18. So ladies and gentlemen, that is the individual LCM values. If you remember, I told you in the previous video as well that the quantity is not given in the question, so we are not supposed to multiply it with the quantity. But in our coming numericals, there will be a role of quantities also. That's it. I hope you got the point that how the LCM procedure works, and the total value will be calculated on the total of the LCM column, and that will be shifted to the current asset section of the balance sheet, assuming there is only one quantity of all these four products. Thank you very much, ladies and gentlemen. Stay safe.